What is going on, guys? Kyle with Finance Bro back with another video. We have some interesting growth stocks that Warren Buffett himself would apparently agree with in buying and investing in. We're going to be talking about these and specifically why they are such a good buy in just a second. But if you haven't already, make sure to join our free Discord, guys, with the first link down in the description below. This is how you get access to our daily buy and sell alerts that we post on a daily basis. It's literally free to join. All you have to do is hit that link. And if you haven't already, I really recommend joining. But let's talk about this NASDAQ bear market, two Warren Buffett growth stocks to buy in 2023. I'm going to give my thoughts on this overall article, tell you if I agree, disagree, and everything in between. Down 49 and 65%, these Buffett-backed growth stocks are priced at levels that could deliver big wins for investors. If you type the phrase value investor into your favorite search engine, there's a good chance that you'll get plenty of results relating to Berkshire Hathaway CEO Warren Buffett. While the famously successful money man is almost synonymous with value investing, his investment conglomerate also owns equity positions in some riskier, potentially more explosive growth stocks. With the NASDAQ Composite Index still down roughly about 29% from its high and in deep bear market territory, now could be a good time for risk-tolerant investors to build positions in beaten down growth stocks with the potential to deliver market-crushing long-term returns. Read on for a look at exactly what these stocks are. So basically what they're saying is that with the overall bear market that we're situated in right now, there's two specific stocks that are owned by Warren Buffett that present themselves to potentially take high advantage of the overall comeback that it seems the writer of this article is expecting, but also to the dip buyers, right? The people who are buying the dip on a variety of different stocks right now, and these are the specific stocks that they're talking about. So the first stock that we're going to get into is Snowflake. Snowflake is interesting because this is a more software related play, but let's read a little bit about their kind of overall thesis behind why they're thinking about buying it at this kind of price level and at this time. So trading at a potentially daunting 15.6 times expected forward sales and barely generating profits on a non-GAAP adjusted basis, Snowflake is farther away from the traditional value investing mold than any other stock in the Berkshire Hathaway portfolio. Berkshire's Snowflake position is also unusual in the sense that the investment conglomerate purchased shares leading up to the company's initial public offering, or IPO, in September of 2020, and then purchased shares at the company's IPO debut price, something a Buffett-led company hadn't really done since the Ford Motor Company in its public debut in 1956. So while Berkshire has yet to offer a detailed rationale for its seemingly uncharacteristic investment in Snowflake, it seems and looks more like it moves with the driven by a more Berkshire portfolio manager, specifically CEO Todd Combs, or Geico CEO rather, Tom Combs. Again, this CEO is a subsidiary of Berkshire Hathaway and has been a customer of Snowflake's. Combs was apparently quite impressed with the data services that the company provided and wanted to be an early investor. Snowflake's data cloud is a data warehouse platform that makes it possible to combine and analyze information that is generated from otherwise walled off clouded infrastructure services. While the company has a highly growth dependent valuation, it is expanding rapidly and posting strong free cash flow margins. The company grew product revenue by just 70% annually last year and posted an adjusted FCF margin of about 25%. It expects to grow sales by roughly 40% with the same FCF margin this year. So very healthy company as far as its overall financials are concerned and the numbers that back it up. And I agree, right? Snowflake is, again, one of those companies that, in my opinion, has a lot of room to grow, especially with the specific factors that we just talked about in the article, but more specifically in the software industry as well. We're seeing more and more software companies take a strong foothold by helping other companies, not just, being a user or a B2C consumer, a B2C type of business. We're seeing B2B style software companies be exceptionally profitable and exceptionally effective at what they do. And I think Snowflake really has the potential to grow in that specific sector. This next stock, it's almost a given just because it's so popular. Amazon is, of course, incredibly popular, but we also know that they have offering just a million different things right now as far as their overall offer package goes, right? E-commerce is a big one. Cloud infrastructure service markets are also something that they're starting to tap into, and it seems that most of these kind of have that theme. We're also seeing Amazon trade almost 49% down from its high just really a year ago now. And again, that really kind of positions itself with a lot of potential for growth. as well as its PS ratio. Its PS ratio is also significantly downtrodden as well there. And again, I would love to see where the specific stock goes. Again, Amazon's a part of a lot of people's portfolio, so I don't want to get too much into that. But these two specific stocks I think are good picks. And I think these are stocks that, in my opinion, have a lot of potential to grow in the future and beyond. If you haven't already, make sure to join our free Discord, guys, with the first link down in the description below so you get access to our daily buy and sell alerts. But other than that, guys, that's all I have for you guys today. I'm Kyle with Finance Bro. Take it easy.